Hi again, it's David. Today I wanted to talk about commission and bonus income or variable compensation for borrowers that are qualifying for a mortgage. So we all know that if you're earning a salary, that's real simple and easy to calculate. Or if you have an hourly rate of pay, we know you work, 40 hours a week at that rate, and that's the income that we're going to use to qualify you. But what about in cases where you have variable comp like commission or bonus income? Well, that's where the stability and the length of receiving that type of income comes into play. So a lot of times a borrower will call me up and say, "Hey, David, good news. I've been in my job, for about a year now, and they just gave me a bonus of $20,000. So I think we're ready to buy a house because we can now use that extra 20,000 to qualify for a bigger house." Well, that's not how it works. So the first thing is you need to have been in that job for at least 2 years. So in order to use the variable comp, we have to see a track record of you earning that variable comp. So in a case of a bonus, let's say you started your job January of 2020, and now we're in September of 22. You've been there for more than 2 years. Great, you meet that requirement. So now we're going to look back at the bonus income you received over the last 24 months and use an average of that income as your qualifying bonus income. So if someone earned $20,000 in the first year and they earned $40,000 in the second year as a bonus, we've now got $60,000 total divided by 24. That's the monthly qualifying bonus income we can use. But what if the bonus income is declining? Let's say it was the reverse. They made $40,000 bonus the first year and only $20,000 bonus the second year. Well, that's considered declining income. So in that case, we can still use bonus income to qualify, but we're going to use the lower amount, just the $20,000 divided by 12, and that's going to be your qualifying bonus income. So again, the stability of the income is key when it comes to variable compensation. The same works for commissions. We're going to do a 2-year look back on the commission incomes, make sure that they're not trending down, that it's stable or increasing, that you have received it for 2 years, and then we're going to average that, because obviously we all know someone in commissions might have a huge month. They make a ton of earnings in August, and then come September and they blanked and they didn't have any commission income at all. Well, the ups and downs that someone gets throughout the year, that's all normal, and we understand that, but that's why we do a 24-month look back to take a more stable and accurate view of that variable comp. So it's not a big deal. As long as you've been in that job for a while, we can use it. We just need to get the documentation to show what you've earned in the past. The easiest way to do it when you're ready to apply is have your final year-end pay stub from the last 2 years, as well as your current month's pay stubs from the current year. So for example, if we were doing a loan here, September of 22, you would need your September pay stubs for the last 30 days, and then you'd want your final December pay stub from both 2021 and 2020. That's going to give us the accurate number on what you earned in those prior 2 years, and then we can include that with the current year's variable comp and determine the average. So very easy to use, and it can make a huge difference in how much you qualify for. A lot of times a borrower, if they're only using the base salary or the base hourly rate and not the entire amount, they may not qualify for the home they're looking to buy. Add in the bonus comp, and all of a sudden they do. So it's very important that we do this. And also we calculate it accurately, because if we do it wrong, it can make a big difference telling you, oh yeah, no problem, you qualify, and find out, guess what? You haven't been in the job long enough and you don't really qualify because we can't use the bonus. And believe it or not, there's a lot of lenders out there that don't even know that basic concept of how to calculate bonus or commission income. And they get it wrong. They give a pre-approval letter out. The borrower gets excited. They go and find a house, get into contract. The seller's excited. The real estate agents are excited. Everybody's happy. And then the lender gives everybody a call. Bad news. Your loan was just turned down because you don't qualify. Your income wasn't enough. We can't use that commission income that we thought we could. Well, we obviously want to avoid that altogether for everyone involved and make a smooth and clean transaction. And that's really our goal. That's what we do. So reach out. I'm here to help. If you have any questions about variable compensation, let me know. Thanks.